representative. Anyway, let's move on from that. Craig's here to talk about his journey as an angel investor. So over to you, Craig. Thank you.
Cool. Thanks for that. And I'm standing in. Nick Button Brown is apparently an award-winning Angel Investor of the Year from UK British Angel Association last year. He's in dice, so you get me. So just imagine me as bald and about 2 or 3 feet taller, and you're about there. For those of you who don't know, give you a bit of background. We're talking about Newbury Race Course. The actual first Insomnia event, which was a big LAN party, still on the BBC's website, was in '99. But I've been doing LAN gaming since '94 when it was DOS and everything like that. And we had to load network drivers, so really hardcore days of Terminators and stuff like that. We then ran these events, got bigger and bigger and bigger. I was at medical school, going to be a doctor, but my parents took it great when I said, actually, I'm going to leave in my final year and go do this full time. And then did. We started the online side of the business, which still exists today, multiplay.com, back in 2002, where I was driving to London and installing servers, and that was hosting servers around the world. We did all sorts of things on esports and competitive gaming, and it's great to hear community being talked about, because that's what esports effectively is community engagement, is the way of doing it. And out of nowhere, in fact, led by a certain person in the room here actually, I was approached in 2015 to be acquired, and it came out of nowhere. And we'd just been building, we weren't thinking about it. Acquired by Game, did my time at Game, but that was good. And they actually then sold on the hosting business to Unity in 2017 for more than they bought the whole business from us for. Which is, I view as validation, not missed opportunity. That's double validation. And ultimately, since it's in 2015, I started angel investing. I started helping other companies avoid. We talk about pitfalls and the scars you make along the way. And people, you have to learn a crash course of how to be a business. Like you have to be the lawyer, HR, finance, every part of the business you have to learn as you're growing it. And you become jack of all trades to do it. That's where I am now. So what I've done so far, I started out with Ascension. Now they're another award-winning VC that does early stage, primarily SEIS and EIS, so tax-efficient investments. And also Nick and I started the Games Angels, which is basically an anarchic Slack channel where we just post deals and people jump in channels, and occasionally investments happen and SPVs and all this sort of stuff goes on. I've always invested in people, not projects, so I'm not a publisher, and I want to be part of the journey because I feel that's how I can add most value along the way. And it's always about relationships. Companies don't do business with companies, people do business with people, and it is a relationship. And today, it's over 2 million. I've personally invested in over 100 companies, but that's across the tech space, that's not just games. And a few notable ones there, the ones you may know, got Raw Fury, I was in early for them, and Global 7, but best one was 11 Labs, was 80x, wow, that was pretty crazy. And that was one that was through the Games Angels. There you go. Quick disclaimer, I don't have to go quickly through this. This is my experience, what I think. Consult your own advisors before taking any of this advice on board is the usual disclaimer. But the sort of thing between finance and games, it's always been viewed as a hit-based industry, and we've had fingers of external VCs burned. We've seen this multiple times where they flood in, I won't say the E word, or the S word, where valuations go sky high and everyone gets high expectations, and what's going to happen? Boom is followed by bust. There's very few specialist funds, with some exceptions, in the space, and particularly angels and advisors, but that's changing as people have exits. You're getting more people who've built games companies exiting those games companies, then wanting to give back and help the next generation. There's always been this disconnect between games and finance, and creative people and finance in general, I find. They talk different languages. Now, I tend to do the translation between developer and finance, and do that sort of thing. And one of the misconceptions is that there's no money out there. There is an awful lot of money out there right now, sat, unallocated, with pressure to place, certainly in some of the bigger funds. that's one of these things, the idea that there's not enough money out there. That deals are still being done, even in so-called hard times like now. There is money out there that is not earning any management fees if it's not placed. And understanding how that works is interesting. But I'm going to talk more about angel side of investing. We still need to do more to educate people about the games industry. It's still the biggest thing a lot of people don't know about. I still get surprises when I say it's 3 times bigger than music and film combined. People still get surprised. And it's just as like people still don't know about AI. You know, I still people don't know about AI. We assume knowledge that people have, and they just don't have it. We think people know what we know, and they don't. When I'm talking to someone about investment, I take it right back. I go, right, hold on, before we even talk about investment, what do you want? You may look over there and see someone exiting for a significant value, but that's wanting the end result. Do you want the journey? The journey is not what you want, I would argue. And if you do want that, fine, we can talk about it, but let's look at what you really want. Because there's absolutely nothing wrong in building small businesses. 86% of businesses in the UK employ 9 or less people. It's because number one, it's hard to grow and run a business at the same time, and you go through barriers of growth where everything's got to change. What worked before doesn't work anymore. What got you here won't get you there. There's nothing wrong with just building a small team, doing what you love, earning some reasonable revenue, taking out dividends, and just enjoying life. You don't need to get on the train of investment unless that's really what you want. And make sure that your entire team is aligned. Now, I've laboured this point and still come unstuck with some teams. And is there other way? Do you want other people involved? Is there another way to fund it? I mean, look at debt financing, look at friends and family first, look at other options. And I didn't ever take external investment. I did it organically, reinvest, and then took some debt along the way, primarily to survive the 2008 financial crisis. But that was another thing. And values are important, and if you ever see a company with values written on the wall that run a mile, because they seem to expect those to osmose into people, that's not how it works. And number 9, if you ever see integrity as a value, that is not a value at all. That is a permission to play value. You should have that anyway. If it's on the fucking wall, there's a real problem in your company. Put it that way. And there's a great book, Start With Why, Simon Sinek. Met him, he's one of my favourite sort of guys. People are all decisions that people take are emotional in nature. There's a neuroscience to back it up. The part of the brain involved, the limbic system, is always involved when someone is making a decision. All decisions are emotional at some level. So starting with the why they want to do something, not the how or the what, is very interesting. And this is where you get to alignment. Particularly, we're talking about 5 members of the staff founding team. If they are not aligned, you are off to a really bad start straight away. If one of them isn't thinking about working for someone else in 3 to 5 years, don't take investment. Because the minute you take investment, you're starting a clock. And you need to be aligned with the investors that they are expecting you to exit to someone in 3 to 5 years, 7 years, but they won't expect that to be the outcome, the direction you're traveling. If you're not on board with that, don't take their money. It's as simple as that. And people do. I've had this with one of the companies, and I laboured the point, and still, it got to the point of they're about to be acquired by a Microsoft or a Sony, so I don't want to work for them anymore, I want to go. I said, we had this 5 years ago, at length, and now you're telling me. So even when you labour the point, sometimes you can come unstuck, when people aren't exactly true to themselves. I'm probably preaching to the converters in here, all the various types of funding that is out there, but some other people don't even think about some of these other ones. They don't think about debt, or they don't think about friends and family or other things. And some of these things, the SCIS and EIS is still one of the best kept secrets in the UK. So many investors I know don't know about it. They still don't know. I mean, the fact we still use paper for it, right? And HMRC hasn't gone digital with it. It's ridiculous, but there we are. That's another thing. And then you've got things like venture capital and private equity, which do whole separate talks. If you're interested in project funding, publishing, that's where you go. As I said, I invest in people. I want to be part of the journey and project 1, 2, 3, 4, not just and help you build your business. And then there's things you can do, particularly when we were building multiplay, we relied a lot on asset finance. So when you're rolling out hundreds or even thousands of servers, asset finance. because that's a lot of capital to have on your books. Most airlines finance all their planes. They don't fly them. They're all on finance because that's a lot of capital to have tied up. So why choose angels? We tend to be earlier because that's when we can add more value. There's little point in jumping in at the same time as Andreessen Horowitz at a 50 million time because you're way down the journey at that point. I may be able to have some value and some connections, but that's probably too late for me to be able to add the most value to a business. We're normally exited entrepreneurs, not always. So we have been on the journey that you're on at the moment and can bring that wealth of knowledge with us. We normally have a big black book of contacts, and it's really more about what we bring other than the money that should interest you, not the money. The money you can get from all sorts of places. So you really want smart money from someone who could really add value to your investor. And we're not likely to start wanting things like preference shares and matters reserved and things like that because we tend to be in at seed or seed plus, so the very early stages of funding. When you start having a VC on board, you're then going to start getting, to protect themselves, more onerous commitments being made, which is part of the growth journey. More motivated to take risk personally because of the tax efficient investment schemes. For example, SCIS, 50% off your income tax straight away, and then no CGT if you exit after 3 years. That on its own, the no CGT after exit 3 years, is worth it on its own, regardless of anything else. And that's come in very handy. And then it allows reinvestment, which is why I wonder why more people don't do this. Some of us can help by simply being on your left. Names matter, it builds confidence. When you're looking to people who's been involved in your business, what experience they have, what exits they have, it can help a lot to have. And that's something with the games angels, why sometimes we do things called SPVs, special purpose or special project vehicles, is because you might have 12 people going into a company, but we'll do it as one entry on the cap table. But you get 12 people to help you, not one. But one might put in $1 grand, one might put in $100 grand, but they're all in the same vehicle to go into a company. And so what do we look for? For me, it's all about team first. Team above all else. A good team that strive to succeed and succeed. A bad team will take the best idea you've heard of and fuck it up. They'll literally do that. And are they aligned with you? Do they share your values? And that's both sides of the table. When I'm talking to people looking for investment, I say, this is a relationship and it's a long-term one. The average investment lasts longer than the average marriage. So be sure that you're comfortable with these people and you can work with them moving forward. Number one thing, not just for taking investment, but in general for corporate health, like team health, is alignment. If your team is all pulling in different directions, or you're pulling in a different direction to your investors, that is a recipe for disaster straight away. Next, we'll know what the defined market opportunity is. So is there a product? Have you thought about route to market? That's often the one thing that most decks fall down on, is a very established route to market. Is they haven't thought about it, that sort of thing. Have you thought about your competitors? At Ascension in particular, we look for a minimum of 12 months, if not 18 months runway, assuming no sales. And is there anything defensible about what you're doing? Is there any kind of moat, any USPs? And the one thing we know about a forecast is it's bullshit. It's wrong. Forecasts are wrong, and revenue forecasts are hilarious works of fiction. The thing you can generally get a good idea though is what the cost will be. So cost is more important to me than, I don't give a shit about your revenue forecasts, because I don't know it's a work of fiction. I want to know, have you thought about your costs, and are you taking enough money to get you through 18 months, 12 to 18 months? Because I don't want you raising again. It always takes you twice as long to raise than you think it will. So think it takes you 3 months, no, it takes you 6. And you are out of the business raising while that happens. The CEO, whoever's doing it, is out of the business, effectively, while you are raising. That's all they're doing. Now, things to consider in us, because you should be looking back the other way. Smart versus dumb money. There's lots of money out there, loads of it. But what else do they bring to the table other than that cash? Because that actually is often worth multiples of what the cash they put into the business if you get the right people involved. Just one connection can bring you a contract worth way more than the investment in someone. Are they asking the right questions? Do they seem smart enough to understand your business? Are they doing due diligence? Because it's almost like an obligation on you as well to think, should I be taking these people's money? Is it right? But as I said before, it's the relationship first for me. Is can you work with them? Because you're going to be together for a while. And if you have, and when it goes wrong, it's messy. Having had to be the bad cop a couple of times, and I don't like being bad cop, with founders who want to leave and things like that, it's not fun. The normal range of evaluation of around is between 15 to 30% post money. And when we say post money, we mean there's a glossary of terms you should really have. Is basically, if you're worth 5 million and you're raising 1.5, the post money valuation is 6.5. That's literally what you do. You put the money in as the value, as the post money valuation. Normally it's 15 to 30%, which means after 4 rounds, roughly, the founders will still own just about half of the business. Because I don't want founders sat there with 10 to 15% of the business because they're not motivated anymore. And I've seen this happen multiple times at companies where they got too much owned by the investors, and either you have to Phoenix it, which means literally bin it and buy the OPL and start again, or you need to recapitalise the business completely. Sorry.
Would you prefer me to wait till the end?
You can wait till the end, or you jump in.
The thing is, so I work in startups generally.
Yeah.
We use things like the Berkers method to kind of like establish what something might be worth.
Okay, there's loads of ways of valuing it.
I was going to say, do you have specific ones for the game?
Honestly, what drives that valuation is how much of the company you're selling, not the value of what you actually have.
Okay.
It's a made-up number.
Yeah.
Because, if you really worked out the truth, if you looked at the book value of your company when you start up, it is 0, or maybe tens of thousands. But you want to raise 1.5 million to make a gain. You have to set a number that you sell a reasonable percentage of the company. That's where that 15 to 30 comes from. You'll want 15, we'll want 30. That's the way there's a bit of tension that goes between the two. That's just a rule of thumb that generally is in those ranges. And even at the moment, some deals have been done where they'll cap their percent if other people follow them. We won't get into the complicated stuff like that. But also, what are the expectations of the investors? What are their normal size of, what normal ticket sizes do they do? What's their type of investments have they done in other things? What are they going to want? Sometimes you'll want us to get more involved, sometimes you won't. I will do as much or as little as a company needs. I'm known for being the least non-exec because I can't help it. I want to get my hands dirty and get involved.
Do you tend to judge it then more on the market possibility rather than potential traction with like an early concept, or?
I literally team first before I even get on to what they're doing. But then you start looking at, I've got a quick slide there basically. Because really, your pitch deck is 7 slides. It's literally 7 slides. This is more about being able to check time. This is really more about, you need to be resilient. Now, when you do sales training for people, everyone can learn to sell. Soft skills are not soft, they're very hard. And both in their impact and in how hard they are to teach and learn for some people, particularly in a neurodiverse industry, where some people may not understand emotion the same way you do. We massively over-index in neurodiversity in the games industry and in creative industry in general. I'm ADHD, who knew? It came as a surprise to no one but me, apparently, when I found out. For example, it takes on average 9 no's before you get a yes in sales. So 9 investor meetings before you find one you're going to likely find something interesting. That's the rough thing. And the number of people who send one email and then never follow up, never try any other method. You've got to be, there's a book called Grit, and that's I could give you a massive list of books, but a book called Grit about tenacity and resilience is more of a predictor of success, basically. So keep going. Don't be afraid of pushing. I've had some people say, but I emailed them last week, I don't want to piss them off. It's like, do you have any idea how many emails they get? You're not, and schedule your email to arrive at 8:30 or 9 in the morning. So it's at the top of their inbox when they get to their computer. There's these sorts of little tips and tricks you can do. Use a CRM, schedule follow-ups, and do it. This is it. Don't just focus on email. Find other ways to get at that person. Do they know? Does one of your angels know them? Do they go to any meetings? Are they on social media? There's lots of ways to do that. And I'll get this, attend events, you can do them virtually or you can do them in person. I think this was written back in COVID, the original version of this. And consider agents, but they'll take a percentage. I don't like doing that because I think me taking a referral percentage for getting you investment isn't aligned with how I want to work with you. It doesn't feel right. It's the wrong motivation for me. So that's not how I do it.
Yeah, venture really doesn't like it. When we see agents, we always say no.
No, I don't like it. And it's illegal in America, I believe, to take a percentage for referrals.
I'm surprised to hear that.
Yeah, one of the one things that's illegal in America and not here. I do a lot in terms of wellness, mental health, things like that. And I'll give you one quick takeaway here. You're going to have a lot of meetings that are going to feel like a waste of time. They are not. They're all learning. Every single meeting you'll have is an opportunity to learn, but have strategies in place to deal with the fact you are human and it will take its toll. And it's okay to not be natural as a salesperson. It's a skill you can learn. I can teach anyone to sell. They won't all be the greatest salespeople, but you can teach anyone what the basics are of it. One tip for me, a 70% list. You do a daily check-in with yourself. Have a list of things that you know if you do it will make you feel better, will feed your soul, will raise your spirits. It could be going for a walk, it could be a particular track of music, it could be a YouTube video, it could be an inspirational TED talk. Have a list, and I call it the 70% list. Have a list of things, write it down, have it like at the top of your Evernote or your Notion or whatever, and check in. Am I between 0 and 100? And if you're below 70, do something on that list. And that's a way to keep your resilience up. And just things like exercise is often something that helps with people deal with this sort of stuff. It is well known that depression massively over-indexes in entrepreneurs. So have strategies to deal with them. As does neurodivergence, because we don't tend to fit in the normal corporate cultures. So that's just a quick thing about dealing with that. What do exits look like? We normally start at the beginning with a good idea who you're going to be selling to. It's a surprise, but it's normally you've got a good idea of who the likely people are going to be. It's likely to be some sort of strategic sale to someone in the space that you're going to disrupt, because they're just going to buy you. I love it when people say, wouldn't Microsoft or Amazon just throw some developers and build this anyway? Bullshit, that's not how they work. They let other people do the hard work and then they buy you. That's what happens. Obviously there's things like IPOs, private equity doesn't often get known about by many people. There's a bit more of it around these days in games. They're a different beast really, but it's still, and if you have to be profitable, it's all about EBITDA and then looking to execute the next private equity person is what they tend to do. And the best advice I had when I was selling the business was be happy on day one. Because 9 times out of 10, you're not there 6 months later. In reality, I'm one of the few, I can count on one hand the number of entrepreneurs I know who were there for their full time period. I managed to stay, well, primarily because I got on really well with Martin Gibbs, the CEO of the second game, even though I was going through an emotional roller coaster of it's not your company anymore, the culture's changing, it's a real emotional roller coaster. So everything else is a bonus. Be happy on day one is the best advice I ever had, and I still give it to people. Whether that's a deferred consideration, whether that's vesting shares, earn out, whatever. Ignore that. Look at what's day one. If you're not happy with that, don't do the deal. That's my advice. That's how many slides you need in the initial pitch deck. Certainly for the first stage. For people like angels, I always like to see team at the front. You'll get conflicting answers depending on who you talk to, or what they want to see in a deck and which order it should be at the time. I want to see team first, because I want to know, number one, do these people look like people that can actually do this? Are these people that I want to work with? And do they have a set of skills between them that's going to complement each other? For example, do you have a CEO-CTO combination in a tech business? Don't have that. We have backed single founders, but that's rare. It's normally at least 2, and they need to complement each other. Then we go on to what's the problem you're trying to solve? What's the product? Are you solving any problem? Is this a problem? Is this a solution looking for a problem? That's a bad thing. Blockchain. in general. Route to market is often the one that most people haven't thought deeply enough at all. Have you thought about the total addressable market, TAM? What is the addressable market you're going for? And use of funds and your forecast for costs is it's more important than income. The stages I'm looking at businesses, which is normally seed, Series A, so sub 5 million being raised. It's different in the US and the UK what those terms mean, just to let you know. Like a seed in the US can be 5 million, here it's like 300 to 500k. But the forecast to me, as I said, one thing we know about a forecast is it's wrong, but your costs are more predictable than your income, far more predictable. So make sure that you're taking enough to have a 12 to 18 month runway. And that's all you need, is those slides. I've kind of gone through that quite quickly. So, questions, I guess. We can go and dive deeper into any of the particular areas. Let's try again.
Sorry, because I'm this thing, I'm trying to translate it, because I'm working in basic accelerators.
Okay.
It's like my bread and butter, and I've supported it.
Oh, you go.
Can do. Hello.
Hi.
Yeah, so I work in incubation accelerators,
Yep.
and I've helped a video game an outsourcing agency recently go through a raise. So in terms of that problem space, that makes sense. But how do you position if you're building a game and
Your problem is the problem you're fixing is someone's need for entertainment.
Okay.
As well, how I frame that.
Okay.
And is there a space for that particular game?
Is
it something that is not being served well, or are people looking for a different thing? When it comes to, as I said, I don't tend to focus just on content.
Okay.
I tend to focus on a company that's going to do. I tend to look more for, are they building technology as well as content? In what I'm looking at, like, are they building engine tech, or are they building additional things that make it more scalable?
Perfect.
And I don't want just game one. I want game 2, 3, 4, 5, 6. You know, that's it. So my ideal investment in the games industry is a company making an engine that's novel, that is better than what's out there, and is going off and doing multiple other things. Is going to have multiple games on it. You know, that could be the next Unity. You never know. Beware the black swan effect. You know, as in everyone says, I want to be the next Minecraft. It's like, well, you're not going to do that. That is a black swan. You know, it's a low probability, high impact event. Let's focus on more achievable objectives. Any other follow-up on that?
Perfect. Yeah, great. Thank you very much.
Great. Can I make a comment?
Yeah.
Do you mind?
Go on then. Ian.
That's all right. I'll be positive.
Would you like the microphone?
No, I'm okay. I just wanted to reinforce something which I think is very important, that Craig gets to the sale in 2015 with multiplayer. People see sort of champion, this old thing of champions made when no one's watching, right?
Yeah.
And actually, if you go back, however long it was, 20 years
Yes.
of being an entrepreneur with multiplayer, I think just reinforcing that point and asking a question of, what were you thinking when you go through, because I know you very well, obviously, and I know, but what were you thinking through those 20 years? Because everyone sees the end result, they see you standing on stage doing an angel thing, they see the sale, they see the noise.
They don't think about the journey.
But they don't think about it. So it's not a straight line, is it?
No, it's not. We nearly went bust like 3 times along the way. What doesn't kill you makes you stronger, sort of thing. I never set out to build a business, really. I set out to I enjoyed playing games, so I built events to bring people together to play video games. In fact, that became the thing. We brought people together. Was the 3 words that kind of summed up everything we did. We started doing online game servers because we were doing events, because we wanted to play games online ourselves, didn't like what was out there, so we built a new product. So we kind of by accident created a business. But, and as I said, I was doing this while I was pursuing a different career, but then I switched and did it full time. But it's not easy. It's hard to grow a business and run a business at the same time. Very hard. And there's a reason that many companies, like 86%, are less than 9 people. Because when you go from those first 5 people to 25, there's a well-known business barrier there, because everything's going to change. What got you here won't get you there. There's a book by that name. And suddenly you have to worry about things you didn't have to worry about before, like health and safety, HR. You suddenly need to be active in how you use your culture. And what's interesting for me is that I did things instinctively that it wasn't until 15 years later when I started doing much more reading and more training and joining things like Vistage, which is like an organisation of CEOs and things, that I understood why it worked. when I started really going into the psychology. I do a lot of team psychology and the dynamics of teams and things like that now, when we sort of go in, because almost always the problems in the business are a people problem, and 9 times out of 10 it's a communication problem. I'm dealing with that right now with the company. That's that I'm diving into. I'm not even invested in. It's just going in to help them make. But it's that journey of breaking through 25, then breaking through 50. It's as hard as starting up again to do that, and suddenly got a lot more mouths to feed. There's a lot more at stake, and that weighs on me. I remember it is lonely at the top, and I was a family business. My mum and dad were pissed off at the beginning, but then I hired them both to work in the business, I would hide what I was really thinking from them, because I knew they would go off the deep end if they knew what I was really thinking at times. So having that outlet, maybe something to talk about here, is having the outlet to someone as either a mentor or an advisor or something that's been through it, you can talk to that, because very corny line, if you tell, you break the spell. You know, literally, just talking about the problem itself is cathartic. If you bottle it up, it tends to come out in other ways, and they tend to be negative if you don't have more positive ways of it coming out.
You had your brother working with you earlier.
I did.
Was that helpful? He's a very level-headed man, Stuart.
Yeah, and my other brother as well was joined for a period, but he couldn't hack startup. Both my brothers came from building and construction industry, so we're used to having large companies behind them. Not a lot of people can make that transition to a small business, just as a lot of people building businesses can't make the transition to corporate world. It's a whole different ballgame. But yeah, my brother Stu was involved as well. He found Newbury originally, actually, because he had a building site down the road. That's how we found Newbury Stores.
Did he build your office for you as well? Is that
he did, yeah. Well, he built it for our landlord, and actually Unity still kept it until very recently. They finally, the barn, oak framed thing. You wouldn't know there was this tech business in amongst loads of converted pig sheds. But it doesn't matter. You just need a fibre line, and there you go. But it's Jimmy Carr talks about this actually on some of his TikToks. He talks about people see where you got to, but they don't think about that journey, and that's a very good point in terms of.
I think lots of people who are I-16 or something, or I-12.
Oh God. Panasonic 2 and that sort of stuff.
We saw you at 3 in the morning, teams doing and stuff. So I think the point is just to reinforce that point that it's you stuck to a mission and a vision, and you've go to your first slide, and that's really what gets you there.
Alignment, and lead, if you lead from the front. I've never asked anyone to do anything I wouldn't do myself. I remember a particular interview with someone, and she said, "Well, you wouldn't expect to clean the toilets, would you?" I said, "Well, I clean the if I'm going to do it, if there's something I would do and you wouldn't do it, there's going to be a problem straight away." So that's a very short interview. But you'd find to the point of that. There comes a point though where that is a problem, where you have to be able to pull yourself up to have a helicopter view. I don't even have time. This is a sign of a really good team. Is they would tell me to f*** off because they got it and go do something more important. Literally, they would, because I would be cabling the tables and things like that with them. And obviously that's you talk about $25 an hour task rather than $1,000 an hour task. And yeah, I should be off there talking to sponsors and doing press interviews and things like that. I shouldn't be under the table calling, but I want to be because I want to be there showing that I'll do it. And but that type of leadership builds loyalty like you would. And there was a quote recently from someone I'll see if I can get it to let me share it. Dan said about an army of volunteers that would go to war with me. That's I think he said to it. But because a lot of volunteers just gave up their time to run the events. It's amazing what people do for peace.
It's a good motivation for us. We'll ask if there's any more questions from the audience. A question over here to the microphone.
Hi, it's probably a bit of a daft question, but I feel like I'm missing a trick because all of the investors that we meet, it's friends of friends and recommendations.
Yep.
Is there a trick that I'm missing? Is there a place that, like, as an angel, you would register to hear about pitches?
It is all it's a classic line, isn't it? It's not what you know until you know. And it is hard to get through the noise, like my LinkedIn inbox. The minute you put investor on anything, it's just noise. there's a space to go. We keep thinking about whether we're going to put a Games Angels site up. We did have one, we took it down again. But we're talking about whether we put a form up for people to submit things. We're trying desperately to keep it informal so we don't have to go through any FCA regulation or anything like that. So it's just a network of people that share intel, basically. But yeah, reaching out on, as I said before, reach out on LinkedIn, reach out on multiple social platforms, not just LinkedIn, and don't stop at the first email. 9 emails minimum before you stop, or if you think about stopping. This is people don't think that so many people stop with 1 email. They go, oh, they're not interested. No, they just got lost in all the emails that they get. Yeah, it's email is not a form of communication. It's guaranteed. Go other ways as well. But one of the things that use the angels you know, use the people you know, because a referral is always best. A warm lead is always better than a cold one.
And you've got a warm lead opportunity because Craig's here today, so have a chat with him afterwards, get his details. You can't run away.
Details on the final slide. There you go. There's some details.
We'll make sure that we share those details so people can harass you.
Yeah.
We'll bring this session
Harass
to. Well, that's the way to get you to react. Craig, thank you so much for your time. Really appreciate it. Round of applause for Craig.